In today's video, we'll be diving deep into the recent developments surrounding SoFi stock. This is a moment many of us have been waiting for, as today brought incredibly encouraging news. If you've been following the channel, you know we prepared you for the CPI report. The results? In line with expectations, signaling a positive turn for the market. Even better, we're heading into another anticipated rate cut next week. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. This is excellent news for SoFi. The CEO had predicted a total of 75 basis points in rate cuts for the year, but now it looks like we're heading toward 100 basis points. Once again, the SoFi management team is guiding us into brighter horizons as we approach the Q4 earnings report. Let's break it all down. Looking ahead to 2025, the outlook for SoFi is undeniably optimistic. According to the CEO, 2025 is shaping up to be a groundbreaking year for the company, one that he describes as offering the best macroeconomic environment he has seen since joining. The market may not fully grasp his optimism yet, but every week, analysts are beginning to catch on. Institutions such as JP Morgan and Bank of America, despite their earlier downgrades and doubts, are gradually acknowledging SoFi's potential. Now, let's talk about the two major catalysts that could propel SoFi stock to new heights. First, if the company's loan platform scales to $8 billion in originations, this will mark a transformative moment for its financials. Second, securing a top 10 financial institution as a client on the Galileo platform could revolutionize its position in the fintech space. With these two factors, I believe SoFi stock could clear $40 in 2025. That's right, $40. To put this in perspective, my original target for mid-2026 was $45. If these catalysts come to fruition, we could see those levels approached much sooner than anticipated. At its core, SoFi's long-term strategy mirrors the path taken by Amazon over the past 25 years. What Amazon achieved in the e-commerce and cloud computing sectors, SoFi aims to replicate in the financial services space. The company is positioning itself as the AWS of legacy banking, addressing outdated cores and systems that many traditional banks still rely on. SoFi's Galileo platform represents its entry into banking as a service, combining fintech innovation with legacy banking infrastructure. This hybrid model is what could eventually give SoFi a valuation multiple similar to Amazon's AWS segment, a key driver behind Amazon's massive success. Now let's consider the current market situation. With the CPI report showing steady core inflation and another rate cut on the horizon, we're entering what's commonly referred to as the Santa Claus rally. For those unfamiliar, this term describes the seasonal uptick in stock prices during the final weeks of the year. Over the past 2 weeks, SoFi stock has faced headwinds, including downgrades from JP Morgan and Bank of America, as well as significant selling from Silver Lake. Despite this, the stock has shown resilience, consolidating around the $15 level and rallying in response to today's positive macroeconomic news. This brings us to a broader point about SoFi's strategy. Just as Amazon diversified its revenue streams with segments like AWS advertising and subscription services, SoFi is doing the same. Currently, lending accounts for 50% of SoFi's revenue. However, its financial services segment is growing rapidly, with year-over-year growth of 80%. In the future, this segment could surpass lending as the company's primary revenue driver. Galileo, the AWS of banking, is another major growth opportunity. Although growth has been slower in 2024 due to external factors such as political uncertainty and interest rate fluctuations, the stage is set for an acceleration in 2025. It's also worth noting that SoFi is exploring the addition of new revenue streams such as subscription services. With SoFi Plus, the company is preparing to introduce a paid subscription model similar to what Robinhood has done with its premium offerings. This diversification aligns with Amazon's approach, where multiple revenue streams contributed to its dominant position in the market. As SoFi continues to execute on its strategy, its valuation is likely to move away from traditional banking metrics and toward a fintech hybrid model. So, what can we expect in the near term? With rate cuts anticipated next week and a strong close to 2024, SoFi is well positioned to capitalize on the upcoming Santa Claus rally. As the broader market reaches all-time highs, tax loss harvesting is minimal, creating a favorable environment for growth stocks like SoFi. In the past, SoFi stock has weathered significant challenges, including downgrades and insider selling, yet it has consistently bounced back. The resilience displayed at the $15 level is a testament to the market's confidence in the company's long-term prospects. Zooming out to 2025, the Galileo platform remains a critical component of SoFi's growth story. While its growth has been slower this year, the underlying potential is enormous. As more companies recognize the benefits of Galileo's advanced banking infrastructure, adoption is expected to accelerate. If SoFi can secure a major partnership with a top 10 financial institution, it will further solidify its position as a leader in the fintech space. Combined with an $8 billion loan platform, these factors could drive the stock to $40 and beyond, potentially entering overvalued territory as investor enthusiasm reaches a peak. In terms of technical performance, SoFi has been holding steady despite low trading volume and external pressures. Today, the stock closed up 4.2%, outperforming major indices like the S&P 500 and NASDAQ. This kind of performance, especially on low volume, indicates strong underlying support from investors. With the Q4 earnings report just weeks away, the countdown to full-year profitability is officially on. Achieving this milestone will not only attract more institutional investors, but could also pave the way for SoFi's inclusion in the S&P 500 by the end of 2025, another potential catalyst for the stock. In conclusion, SoFi's future is incredibly bright. The company's management team has demonstrated a clear vision and the ability to execute, even in challenging market conditions. With the macroeconomic environment improving and multiple growth drivers on the horizon, 2025 is shaping up to be a transformative year. My price target remains $40 for 2025, contingent on the successful execution of key initiatives like the Galileo platform expansion and loan platform growth. For those considering entering the stock, now may be an opportune time to start building a position. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.